Futures are up in pre-market trading, even as a Spanish auction today could see Spain pay its highest short-term borrowing rates in over 6 months. Traders anticipate the EU summit, which begins Thursday, as the Eurozone struggles to solve its 2-year debt crisis. Plans of a banking union and stronger financial unity are on the agenda. I'm Brittany, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Brittany with The Street, and together we bring you the morning call. So headlines this morning, of course, include Spain borrowing rates hitting record levels, and we're also getting rumblings out of Italy. So before we move on to that, Scott, what did you think of yesterday's action? What did you make of it?
I feel like yesterday was just a continuation of last Thursday. If you recall, on Fed Day, we rallied into 1360 in the S&P. A good time to take some profits, a good time to lighten up, as we just had a 100-handle move from 1266 up to 1360-ish or 1363. So it made sense to sell some. And then on Thursday, you had that potent downside move that was fast and furious that should have gotten you out of some of your longs if you didn't put on those hedges then. And that move was so fast and furious that it told traders, you know what, be a bit cautious, because that usually leads to another downside move. So Friday had a little bit of a bounce back, and then yesterday was continuation. So now today the futures are up a little bit, even with the headlines, just because we just came off about 50 handles in the last few sessions.
So what are the key levels that you're watching the S&P right now?
So if I give you a visual, you'll take a look at the chart here of the S&P, you will see that the reason why we came up with a 1360 sell was a fewfold. One, we just retested this neckline from this head and shoulders top. So typically you go back up, you retest, and you typically get rejected. Plus in this spot, my oscillator that I talk about was plus 75. That was more overbought than we've been at any point this year. When you're that overbought, you actually need good news, not just hopes and prayers of possible stimulus. So anyway, on Wednesday came out the Fed, nothing new, no new stimulus, just the twist extended, and then Thursday this happened. So if you look at the potency of this bar, it engulfed 1, 2, 3, 4 days to bring you right back to retest the neckline of the inverted head and shoulders pattern, a different pattern. So you had two macro patterns, one here and then another here. So what happened? We stopped there, paused on Friday. Yesterday was the follow through. Now the question is, are we going to pause here at about 1310 on the SPX and bounce, or are we not going to be able to bounce at all, kind of like what happened on Friday, and not take back half for then some continuation through this key level to bring us to the 200 day at 1296, and then you can't even you can't discount or throw away the fact that we can retest these lows of 1266, because we can.
Now, this week, of course, wraps up June trading. So when you take a look at the action that we've seen the past few summers, does this summer appear to be any different?
Well, typically in the end of June, they do like to mark up the market. And last year, I think at this time, we actually rallied through July 4th. So this time, maybe we hold this level until after the end of the month, and maybe some new flows come in. But overall, the summer feels very similar to the past few. If you recall, I remember standing here and saying, you know what, we have to trade these descending channels and ascending channels because it's going to take time for a directional move as we absorb all these negative headlines. Well, we have the same headlines, we're running out of solutions, and if you look at the past few summers, check out these ranges. If you want to go back, we'll go back to last summer. This is right here. I showed you guys yesterday because, first of all, the decline didn't start till late July, so we were somewhat strong. That's where we put our lower high in, which I did, I thought of expected here. You had your big move down, and then once we hit the low in August, for 2 months, we zigzagged about 5 to 10%, 5 to 6 times. Okay, so you had to make money each time. You had these ascending and descending channels. So here was an ascending channel, broke to the downside. Ascending channel, again, broke to the downside. Same way you could say these descending little trend lines, once they broke to the upside. So all in all, like 1, 2, 3, 4, there were about 5 ranges you had to trade until we picked the direction, which wound up being higher. Summer before that, just to give you a little bit more points of reference here, was right here, where same situation happened. Okay, we had a big move down in May. Remember the flash crash, actually? Okay, so that happened in May, and then since then you had 1, 2, 3, 4, almost 5 moves of a big range that had to be absorbed until we had a directional move. So right here, fast forward to where we are, we're only in the start of it. Let's get there. So get there quickly. Sorry for my slowness here. So just say if this was 1, 2, 3, 4, 5. You could easily see either move to retest or move to come up, and we could continue this before either we pick a direction to the upside or the downside. So don't buy highs, don't sell bottoms, and just try and take a few percentage points out of the middle.
All right, well, high beta tech was a real mixed bag yesterday. It seems to be a sector of haves and have-nots. Haves, of course, being stocks like Apple, Amazon, have-nots, Google, Baidu. Let's start with Apple. With low volume, we really haven't gotten that momentum breakout to the upside. So what are the key levels that you're watching in Apple right now?
I think last week I was a bit excited that we'd break above 590, and we didn't, so I got stopped out at 580.50. I tweeted about it, we talked about it, those on my virtual floor saw it. So, if you respect your stops, even in an Apple, it could save you money. So if you take a look at the chart, you will see this was when we actually had a decent trade to the long side right in here, and then I was hoping we'd get some sideways action and a move above, but the market didn't want to continue in that direction, so that gave us some clues to the actual market weakness. So anyway, I got stopped out when we broke the low here of 580.80. I kept it tight, and then we've continued to the downside, closing at 570.76, so it saves you 10 points. I know Evan's been on the short side of this, and he was pointing out this ascending channel here that we now broke below. So today I think it's up 75 cents. If we trade below 570.37, you better believe he's going to be shorting this thing, and your next support is this 100-day. So take a closer look here, you can see it, which stands right around, what's the 100-day right now? The 100-day is 565.09, and then if that doesn't hold, you could see it move down to the 550s. So at this point, even if you're an Apple bull macro, short term, there could be some pressure here. So I would take it a little easy.
All right, and Amazon, another strong name, trading above all key moving averages right now. So when you take a look at its chart, what does the pattern tell you right now?
This is one that tries to be strong on strong days, holding above in the game. It's in the game like Apple. For when the market wants to be strong, it should provide some leadership. So if you look at the chart here, you will see, it held the earnings gap. It's above the moving averages. It's not really pulling in with any force. You now have a descending somewhat pattern here, a flag type pattern. So if we were to ever get above, just say this 225 with any kind of force, any kind of volume, this will be on path to make new highs, and this one should be something on your go-to list once this market gets a little bit better. And some would say even you have a nice cup handle formation where above 225, you'll see these highs, and then you can even take out this. Let's hope that their earnings are good this quarter.
Then the weak names. Baidu still below all key moving averages. Where is resistance and support right now for Baidu?
Baidu has just been like a sell every time it rallies. Technically, it's been on the have-not list, and I feel like I haven't traded it with any success or even really focused on it in the past 3 months. And typically, Baidu is always on my list. It's always in the morning call, and now I only talk about it when I want to talk about some weak names. But anyway, if you look at the chart here, we're coming into a pretty major level. Like if you discount this area, you go across, this 110 is very big. If you take a closer look here, you will see that, again, it's below all the moving averages. It couldn't even eclipse this lower pivot. Lots of stocks during that last rally back up to 1360, went through lower pivots and tested, higher resistance, which would have been up here. It didn't, and then the first signal of weakness, pow, below. So at this point, yes, did it just come from 120 and change down to 111, so it's hard to be short. But I would say if the market continues and sees weakness, that this level will be broken, and the next level underneath it is around 104.
And Google, one of the worst high beta stocks out there right now, retested the recent low at 556 yesterday. So can it hold this major support?
Google is a stock that we came into this year with a lot of admiration for, a great chart pattern. We're like, this is the high beta tech pick. Finally, after 3-4 years, they have enough divisions to monetize more than just search, and then they missed 2 quarters in a row, and it became more of a sell, and it's been pressured. So you have to trade in real time, and situations change. And about a few weeks ago, when it looked like it was going to break its 200-day, I'm like, you know what? I said it was my stock of the year. Who cares? If you're in it on a macro level, you sell it when it breaks the 200-day, especially if you can't get it back in 2 sessions or so, because that's sometimes a trap. So if you look here at the stock, you will see this is when it broke this major support right here. This is when you could have exited and said, okay, you know what? This is when we talked about buying it. Let's take a, what is this, a $25 loss? Woo, not even more than a percentage point or 2, and move on. And if you did so, you've saved yourself some pain, some angst, because the stock has not acted well. And now if you look here on a macro level, this 556 is big. But if it can't rally off this, and if this market doesn't hold 1310, this will be one of the first candidates for my traders to short, and right below this 560, 557-ish will be that level, and you could see it move all the way down to 500.
Coming up, we're going to go in the trenches with oil stocks. But first, a quick commercial break. Stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Oil stocks have been under pressure for most of this year. Let's start with a stock like Schlumberger. In a descending channel, the next support looks like it's at 55, 56. What if it doesn't hold that level?
It could go a lot lower. So that's why I want to quickly just start with the ETF with the OAHs, because it's a good proxy. It's the group of all of them versus just some of the high beta names that could go down a lot quicker than the actual indice. And this indice has been the worst performing one. It had a nice little rally in the beginning of the year like the rest of the market, but it never showed leadership. It was always a laggard. It met some expectations, but then it broke quick. If you go to the OAHs, you will see that, for the beginning of the year, it started off really nice. Just followed this ascending channel until finally it broke, retested, and then it never really found another up move. Now, it's near the lows, it's below all the moving averages, and on the daily chart it looks really bad, but just take a quick look at the weekly. The weekly to me is pretty scary. Weekly patterns sometimes indicate bigger moves, and if you look here just at the weekly chart, I know that necklines are very, very, very strong and they typically hold, but I guess this is saying if we get the doomsday scenario out of Europe, look at the size of this head and shoulders pattern, okay? It's huge. Left shoulder, head, right shoulder, major level here at 33. So if this were to break to the downside and oil doesn't hold 76 and goes down to the 60s, you could see these OAHs at 25 or even below, even to this lower level here. So at this point, this group is acting the worst, and I know fundamentally some of them might have some value in this and that, but just be very careful because sometimes cheap prices look cheap, but they can go a lot further to the downside.
Exactly. So with a stock like Schlumberger, how much could we see it go to the downside?
Let's take a look. And as you will see that once we sold off last week, Schlumberger was hit pretty much the hardest. Here is the weekly chart also, so it looks a lot like the OAHs where it better hold this 60, otherwise it's in trouble for a lot lower prices. You go to the daily chart, you will see how fast it moves to the downside. Look how fast this thing moves to the downside once the market sells off. You had a quick little move to the upside, still below the moving averages, couldn't even reclaim this prior support that turned into resistance, and then pow, right to new lows. Not many stocks went to new lows, as right now the S&Ps are actually still above it. So this is showing a lot of relative weakness. This is telling a very negative story. So I know Schlumberger is a name that people are familiar with, that they like, but overall this stock acts horrible.
And Halliburton is far extended from the moving averages. Where do you see this stock headed?
This too has been a sell. Every time it rallies, it's just a sell. And if you look here at the chart, you will see that it also went to lows. I hate to, tell people to sell on lows because there's always sell signals along the way and better spots to sell on rallies. But this thing right here is already below the September lows here, and it's never showed any kind of leadership this entire year. It's below the moving averages. It's definitely oversold. I just don't see any reason why buying it. And if you go to your weekly chart here also, if it were to, not rally, just say back to above 29 or so, and something doesn't significantly change, this stock also could see, the low 20s. It's just the chart that's telling me. I know Halliburton's a great name. People love it. They love to buy it. They love to own it. But right now, every rally has been sold.
And how does that compare to a stock like Caterpillar, also looking weak? It's been selling off since it broke major support last week, so there's more pain in store here for now also.
This one, I think everyone's trying to make an excuse to buy. Every now and then I'm trying to pick a bottom here too, but no one's having any say, what's the word, not luck, but success buying this thing. It broke moving averages. It also broke the 200-day, just like Google. So even though it's a name you have to respect when key stocks break key moving averages. You look at the chart here, you will see, stock really, if you were obeying your rules, you should have sold it around 100. because this is where it broke out. You know, remember what we were trading at, I think, when Alice was back here. This was your buy price, had a nice move, and then you have a high, lower high, lower high. This was big, big support, and it broke. So this was one area to sell around the 100, or the 200-day was actually 96. So if you sold it when it broke the 200-day because it didn't reclaim it quickly, you saved yourself 14 points. And now it does look like it's drastically oversold, but if you take a look at the weekly chart, look where it is versus where it was in 2009. So on a weekly basis, you know, if this market wants to go lower, this will probably be one of the first things that continue to get sold, and you could see 71.50 before you get some kind of double bottom from, you know, this prior pivot. So just be careful with Caterpillar. I would say if you're an investor, no more than tier 1 until it shows better signs or just another reason to own more than that. But at this point, I don't even think you need to own that.
And then there's National Oil Well Varco, which is hovering around major support at 60. If it fails this level, how much pain could be in store there? Well,
this, as I look at it, a lot of guys made money short it because there was a big support that didn't hold. So it just broke below it. This too, very surprising to a lot of investors out there, as it was supposed to be fundamentally rock solid. And if you look at the chart, you will see that ever since it broke this area right here, you know, active traders got out of the way. Some even shorted it. So this was your higher level area to get out. And then it came all the way down and then has been bouncing around, never reclaimed more than half of that last down move. So it showed you that this was still somewhat in control. And then look what it just broke. It just broke some major support here. This was major support. Okay, so you know, to me, the stock looks broken. If you take a close look here, some guys were looking at this inside range and had some nice success once it broke to the downside. Hard to short a stock after, you know, being down 3 days in a row, but doesn't mean that it's a buy also. So if it can't get back above this key support, which you should watch, because if it doesn't get back above this low here is what is this? This is around. If it can't get above 63, you go to your weekly chart and you will see that there's no big support until down into this 52 area. So just be careful here also.
Well, let's do some quick hits here. Exxon just breaking below the 20-day. Where's this stock headed?
Let's take a look. It had a nice rally when the market rallied, a little different than some of the oil service names. So if you go here to the daily chart, you know, still wall of resistance here at the highs. It's not quite as weak as the group like the OAHs, because this is in the XLE. I would say traded versus this 80. You know, this one is more investment quality you could stay with, but it doesn't look like it's going anywhere too fast.
And JP Morgan did come off its low better than the broader market yesterday. Is this stock still on your go-to list?
Lately, it's been an opportunity. Ever since it announced that $4.2 billion write-down, that was when the low was put in. And then yesterday, a little fugazi funny business was going on. I pointed out in the recap, I'm like, wow, look at the strength here in JP Morgan. It went into yesterday's gap. The spiders didn't. Something's cooking here. Lo and behold, this morning, Goldman Sachs puts it on its conviction buy list, takes out Morgan Stanley. I wonder if they told anybody. Anyway, you look at JP Morgan. You know, it had a nice rally back. You're going to see a lot of resistance here as the bears are, say, try and defend this gap. So, you know, this was a level to trade as support. And now I would say I wouldn't chase to buy it here around 30, you know, in the 37s. But at some point, I do think it will break above this 37. I just don't think it's quite yet. But it's just funny how, if you look closely here, this stock closed well off the lows, you know, when the market wasn't even close to. So somebody knew something. So I would, you know, if you bought it yesterday, maybe sell some into resistance. If you're in a tier 1, sit there, and then at some point it'll break above this and give a nice little gap fill trade.
And Walmart showed relative strength yesterday. It's trading above all key moving averages. Where's resistance support now?
Well, Walmart, I will have to say, was my retail stock and is of this year, and it's performing well. But this is just something like it's funny to look at and expectations. People hated Walmart for the past decade because of the time that they got involved. If you remember, it was one of the best stocks in the 90s. It's a mega cap. Obviously, it took a long time to get in institutions' hands, to get situated for another move. If you look here at Walmart, you will see, just to show you how, you know, sometimes it really is about timing. And if you look here, once it broke above this 62, it now had about an 8-point move, a nice breakout here on Walmart. But then if you look at it on a monthly, for anyone that bought it in 2000, you guys are very, 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 did I say very? Yes, very frustrated because you didn't take into account this move from $10 all the way to $50. So that's kind of what we could be experiencing in the overall stock market also, where, you know, we had a big move. I know that if you're a baby boomer, just we'll close it up on this little thesis here. If you're a baby boomer and you need your money now, yes, it kind of, you know what, it sucks. It sucks that you can't get your money out at the price you wanted. You were thinking about retirement. It's not the way, you know, but if you invested from, you know, the high 80s into the 1997, you did well. So for the last 12 years or so, we've been trading in this range from, you know, really the average of it is probably about 1,100 in the S&P. So at some point for individuals our age, in the next 5, 10, 15 years, we're going to get paid on having a long-term monthly plan. Like today we were looking at a lot of headlines. Is the American dream over? You know, can you still make it here? Is it? I think it is. I think housing is 30 to 40% off. I think that, you know, the market for us, yes, maybe people in the last decade didn't get rewarded for having a long-term plan. But if you're going to put money in an S&P 500 fund and you're in the ages 25 to 35, I think you get rewarded, you know, with the retirement plan later on. I also think if you have a 3 to 4 year old, put it in a 529B. It'll probably help you pay for college. Don't be, you know, confused from all the headlines. Don't be scared from all the headlines. Just invest in a way that you feel comfortable, that suits your lifestyle moving forward. And I've been rambling a lot today, so I apologize.
All right, then real quick, where's your focus heading into the trading session today?
I think they try and support yesterday's level. They try and support this 1309, 10 area. I think some shorts are going to come in right away and try and fade this up move. We're up like 3 handles. If they can't fade the up move, we probably could bounce a little bit, similar to Friday. But if all of a sudden some of these high beta names that aren't showing strength start breaking through yesterday's lows and JP Morgan can't stay up on the Goldman Sachs conviction buy list, then maybe that level gives way. So, you know, I'm going to let it play out a little bit in the first 30 minutes besides just jumping in and trying to put on any size.
All right, happy trading, everyone. Have a great day.